Welcome back, focused learners, to another explainer. Today we're breaking down a massive strategic maneuver in the industrial sector. We're looking at Enerpac Tool Group's latest Q3 financial results, but honestly what we're really digging into is a monumental new acquisition that is poised to entirely reshape their future.
Okay, let's dive right into this. $472 million. I mean, guys, that is almost $500 million in cash. You don't just write a check like that every day, right? Enerpac Tool Group dropped this massive figure to acquire Specialized Fabrication Equipment Group, or as they're better known, SFE Group. This isn't just your everyday corporate purchase. It's a highly calculated play for absolute market dominance.
So, here's our roadmap for today's explainer. First, we'll hit those solid Q3 financial results. Second, the big one, acquiring SFE Group. Third, we'll look at the strategic growth and synergies. And finally, number 4, their updated fiscal 2026 outlook. Let's get into it.
Starting off with Section 1, solid Q3 financial results, because you really can't comfortably spend $500 million without forging a strong financial foundation first.
Now, just for a quick refresher, Enerpac Tool Group has been a premier industrial tools provider since way back in 1910. They're a historic, global leader when it comes to high-pressure hydraulic tools and controlled force products. Basically, they manufacture the highly specialized equipment that makes the world's absolute most complex, heavy-duty, and frankly, hazardous jobs possible to execute safely.
Now, what's really interesting about this slide is the consistent upward operational momentum driving their Q3. They managed a very solid 6% overall increase in net sales year over year. We're talking a climb from $158.7 million in Q3 of fiscal 2025 right up to $167.6 million this year.
Pulling back the curtain on those top-line numbers, we find some pretty significant financial wins. Their core industrial tool and service product segment, that actually saw a 5% organic growth rate. And that underlying operational strength translates to cold, hard cash. They generated $69 million in year-to-date operating cash flow. In fact, their cash engine is running so smoothly right now that they comfortably returned $15 million to shareholders through share repurchases just this quarter. Seriously, they've got the financial muscle to make some big moves.
Which brings us perfectly to Section 2, acquiring SFE Group. This is where the real transformation begins.
So who exactly are they buying with all that cash? Well, SFE Group is a global provider of specialized fabrication, welding, portable machining, and material handling equipment for critical industries. What Enerpac is actually acquiring here is a total powerhouse portfolio made up of 12 well-established, highly respected brands in the industrial space.
Just to ground all this corporate branding in some gritty industrial reality, this is exactly the kind of heavy-duty pipe beveling and on-site machining tools Enerpac is bringing into their family. These aren't just gadgets, they're mission-critical tools used in incredibly rigorous environments. Think refining, petrochemicals, and heavy manufacturing.
They're also picking up premium, market-leading brands like Axair. This equipment handles some seriously specialized orbital welding and cutting. It's a perfect complement to Enerpac's existing offerings, adding really strong margin profiles and new complementary market-leading positions straight into their catalog.
Let's move to Section 3, strategic growth and synergies. Let's see how this all builds together and makes financial sense.
Now, SFE brings some serious scale to the table. Founded way back in 1936, they've got a dedicated global workforce of about 350 employees, 5 production facilities, and 7 rental depots. But the real prize, the absolute game changer here, is their active network of roughly 1,400 distributors. Integrating that kind of global distribution footprint with Enerpac's own massive network, well, that's going to unlock incredible scale.
So the crucial point we need to talk about is the financial impact of this integration. SFE brings trailing 12-month sales of $170 million and $44 million in adjusted EBITDA. But the absolute standout metric? It's the market expansion. This acquisition literally expands Enerpac's total addressable market by approximately $1 billion. And on top of all that, they expect it to be accretive to their fiscal 2027 earnings per share.
And hey, this isn't just about getting bigger for the sake of it, it's about expanding into the right spaces. This acquisition rapidly accelerates Enerpac's growth in highly attractive, high-growth vertical markets. We're talking defense, power generation, and, like the heavy lifting and moving solutions you see here, the absolutely booming market for semiconductor and data center builds.
All right, finally, let's pivot to Section 4, updated fiscal 2026 outlook. We're looking at the road ahead.
With a massive integration on the horizon, how is the rest of the year actually shaping up? Well, this brilliantly illustrates how Enerpac's management is objectively balancing near-term realities with their long-term strategy. You can see they've slightly narrowed their full-year net sales guidance to between $635 and $645 million. And, this makes sense. It reflects ongoing geopolitical events like the conflicts in the Middle East that are impacting global shipping, as well as some near-term pressures from their own internal service improvement plans. But, and this is a big but, notice that the lifeblood of their business, their free cash flow guidance, remains rock solid with zero change, still projected at an impressive $100 to $110 million.
Which leaves us with a pretty compelling final thought to ponder. Enerpac is actively leveraging a rock-solid financial foundation to make a really bold strategic play for future dominance. So, what does this all mean? Will this $472 million investment successfully forge Enerpac's path into $1 billion of higher growth markets? The strategy is definitely clear, the tools are in place, and the execution phase, well, that begins right now. Thank you so much for joining me on this explainer. Stay focused, keep learning, and I'll catch you on the next one.